European ETF market flows came to a halt in May 2015. Net new assets over the months amounted to 47 million euros. This is compared with an average of 8.1 billion euro for the first 4 months of the year. Total assets under management were still up 22% versus the end of last year, reaching 444 billion and including a significant market impact, plus 14%. Flows for equity ETF have slightly recovered, whereas flows for fixed income were negative for the first time for 2 years in an increasingly volatile interest rate environment. Equity ETF flows rebounded to 806 million after losing 1.5 billion in April. This can mainly be explained by the rebound in European ETF with inflows of 527 million. European region ETF saw inflows of 895 million. Country-wise, Germany gathered most of the inflows, whereas flows were negative for the UK on the back of the election. US equity ETF resumes a downtrend with 507 million in outflows. Flows for Japanese ETF continues a positive trend, but at a slower pace, with 345 million of net new assets. Emerging market equity ETF flows reached a 10-month record high of 702 million, mainly concentrated on broad ETF, as investors are starting to rebuild some exposure. Fixed income ETF experienced outflows for the first time in 2 years. Nearly all European fixed income categories were impacted by the bond sell-off at the beginning of May. Short strategies saw positive inflows of 123 for the second consecutive month. On the opposite, European govies saw outflows of 683 million. European investment-grade corporate bond flows were also negative, to the tune of 442 million. This more volatile environment had a positive effect on money market funds, which continue to see positive flows of 292 million for the third consecutive month. Commodity inflows were close to February's record high at 207 million and concerned both global and precious metal ETFs. Thank you for your attention, and I will be happy to speak to you for the next European ETF monthly market trends.